Hey, everybody. Welcome to week 132. So we are glad to have you on here. Those that are jumping on, you know the drill. Q&A for questions, chat to harass us. And yes, I am going to go in and deal with the chat because I did not deal with that earlier. And I don't want to get pummeled by Papa Joe. So we'll see if we can do this. Why is this not working? Anyway, today, guess what we're going to be talking about? Finishing strong. So, hey, we're in the last quarter of 2022. And I really want to hear from you guys, the audience. Guys is a very, it's a neutral term in Kansas, just so you know. It's not male or female, it's just y'all. it's Kansas version of y'all. So we want to hear from you guys as to what are you doing this last quarter to finish strong. Anything that you want to know as far as kind of best practices, things that we've been seeing, especially with potential stagflation on the horizon. We've been talking about this for a while, and depending on who you talk to, the White House says there's no problem, but you talk to a lot of other economists and other people, and they go, not so much. So it just depends. But just in case there is such a thing, what do you do? What should we do to finish strong and moving into 2023? We are blessed to be in Charlotte, North Carolina, because at least with some of the influx of people, I don't think that we're seeing some of the things that I'm hearing in other parts of the country. So anyway, that's what I have to say about that. So also, just to tee you guys up for next week, it is Cybersecurity Awareness Month, if you didn't know it. And it's like dessert month too, I guess. I don't know, but that's out. That's a deal, evidently. And so we're going to have Evan Taylor, former FBI cybercrimes guy, on here next week. Great guy. And also Aaron Bach of Opcala. And you'll understand why he's going to be on here next week too. So anyway, that'll be something to look forward to. Again, hit us up on the chat if you want to harass us. Questions on Q&A. Adam or Jack, it's a jump ball. Who wants to take the first part of rants and raves?
I'll give Jack a chance to get his tech issue sorted out. Okay. No, I think, I appreciate the thoughts on the topic today. I think when it comes to, just the things that I've been hearing out there, from I didn't get a chance to go to the Vistage All City event that just happened, which is a PO or CEO peer forum that I'm a member of. But they had ITR, which is a good middle market economic analyst company that's usually pretty spot on. And they were talking about, they weren't forecasting a recession in 2023, but what they were pretty adamant about is that the labor shortage that we're all feeling now. So getting back to the topic of stagflation, an economic cycle characterized by slow growth, a high unemployment rate, and high inflation. So growth slowing, check, high inflation, check. Nothing happened on unemployment other than it continues to remain very, very low. So, and of the things that I've seen around headcount reductions, I haven't found where anybody has really been laid off per se at a large company. Rather, they have just reduced the hiring of positions that were otherwise open. So ITR's thought was that, we've talked about this in past webinars, that, with the retirement of the baby boomers, my generation didn't, baby boomers didn't have enough kids, I guess. So you got my generation, generation behind me just coming, kind of coming into the workforce, or making their mark in the workforce, and then, it would be sex, I guess, say moms, but it is predominantly moms not coming back into the workforce. They're just, there's just less people out there. So the unemployment rate is low. I think Donnie just raised a question in the chat. How can the unemployment rate be low when people aren't looking for work? I think it's that point. It's like some people have just said, I'm not going back there. They've made a choice to not participate in the workforce, because of whatever reason that they made that choice. You can't, like, if Gary doesn't want a job because Gary has managed to figure out how to live his lifestyle such that Gary doesn't need a job, why would I count him in the unemployment numbers? That'd be like the equivalent of, we have a lot of high net worth clients that don't technically work. They're not unemployed. They don't have to work. So, they're not counting people who aren't looking, and people aren't looking for a variety of reasons. There was a lot of speculation, at the beginning that people weren't looking because of all the stimulus packages, but we haven't had a stimulus in over a year. So, you're kind of down. So you can't claim the government support and benefits argument anymore, because that ship sailed long ago. So you're down to people that people just aren't looking, anymore. Like, some people just permanently left the workforce, period. So if you look at, if the unemployment rate is, kind of what's the delta between people who are looking for work and can't find it, versus work available, they just remove, there's just the count is down through a variety of reasons. Early retirements, people decide not to work anymore. They just don't want to go back. That's what it is. To that point, it's like, we've been blessed that, my family, we're a single income family. I'm it. My wife stayed home and raised the kids. I don't count Julie in the unemployment rate because she's not looking for a job. So you just have people that have now said, I used to work. This whole pandemic thing caused me to stay at home. I kind of like that, and I'm going to stay. So it is what it is.
Yep.
So that was a long tirade to basically say, the labor woes appeared. Economists are projecting that the labor woes are probably here to stay. I know that I've kind of half jokingly said, it'd be great to have like good old fashioned, just mild recession. Like one of those things where it's like, you're falling behind somebody who's driving really crappy in traffic, and you're like, if their car broke down, or maybe they got into an accident, but nobody got hurt and it was all fine, but they had to pay a little price for something, that'd be fabulous. Well, mild recession be great, because then maybe people would be really appreciative, the jobs that they have, and basically that's not going to happen from everything that I've seen from economists. It's more like, look, it's going to remain difficult to attract and retain talent. And it said difficult, it's all relative, like difficult relative to 2017, 2018, which was already hard. Now it's just looks like it's going to continue to remain hard or harder, with upward pressure on wages, because because now you have not only hey, I have, by the way, I have, I'm in demand, therefore you need to pay me more. But by the way, inflation's gone up by 9%, you need to pay me more, because otherwise I've gone backwards on salary. So it's just made it hard. There's no great answer, other than, hey, just really focus on, other places that you can try to still manage the same, bottom line if your sales are going to be flat or potentially be down. So I know that, sorry, I'm not full of great news and optimism this morning, Gary. I apologize about that.
But you know what? We had a
come on, Jack. I need you full of great news and optimism, baby.
That's right. One thing that I'll do a quick plug for the Anything But Typical podcast.
So I can't even make attorney jokes anymore about how there's too many attorneys. Because Jack would probably say, no, not anymore. Sorry, Gary. No
worries. We had an amazing guest on yesterday that we'll release in a few weeks. But Helen Edwards with Spark by Design. And it's interesting, her story, they had 100% fall off. They were on a $3 million run rate and they went to zero in 2 weeks. Well, actually it was within 60 days, not 2 months, not 2 weeks. And man, they had to pivot so hard. And what was amazing is because they were they weren't anticipating this by any means, but they were doing a lot of the right things, working with her front line and understanding, like hearing the heartbeat, and they were creative and they worked really well as a team. And they pivoted so hard that they did these kind of amazing virtual events for people at a very high level. And they ended up finishing as strong as their best year in 2019, which is just really amazing to me. And my point is 2020, I don't know that any of us want to go through that again. And, thank God for PPP and stuff like that for keeping a lot of people afloat. But my point is there's opportunity if you're ready. If you are just sitting on your hands and thinking, oh, well, hopefully those storm clouds won't produce storms, then, good luck with that. But I think what we've been saying for a long time is do everything that you can to get your house in order to prepare for the storms. And if they don't come, even better. So, Jack, it's good to see you. You got your technical issues resolved. At least you've improvised. It looks to me like the iPhone is on. So
yes. Yep. Can
do you have
guys hear
any
me okay?
rants or raves or anything that you want to bring up from Washington, D.C. or other parts of the world?
Sure. Can you hear me okay? No,
Yeah.
I got all this. Okay. All right. So a couple things. Interestingly, there was a Wall Street Journal article yesterday, day before yesterday, and it was dealing with your workforce and that many employers and businesses are looking outward and saying, okay, how can I bring talent in? And kind of a forgetfulness of what you have already in-house. And so there was discussion about, or the article was about, how do we, as business owners, keep our workforce motivated and how we incentivize them. And it was a very interesting article about asking your employees questions. I mean, asking them how things are going and not presuming that things are going okay just because no one has said anything, but giving them an opportunity and a forum to do that. And it is, so for example, we at our office have a suggestion box, which is anonymous. So it's a locked box. It goes straight to our office administrator. So he's the only one that has the key, I believe. He might be able to recognize the handwriting, but it's meant to be that, okay, it goes to one person and then it's funneled to management of our office and to the firm for certain things. And so there's that. There is also the incentives of not just monetary incentives, but creating a workplace that incentivizes others, whether it is, so for example, at my wife's company, they have what's called Bravo, I think it's called Bravo Dollars. And it actually is a more formal program of workers being able to reward other coworkers and giving them actual rewards in the form of, I guess, electronic currency that they can go and buy stuff with, and in recognition of helping out with a project or whatever it may be. So it was an interesting article about that. There's also an article that I read about the younger generation, and I've experienced this, which is the quote, please handle email at 6 p.m. on a Friday afternoon. And it is the, okay, well, it's Friday afternoon, you're kind of cruising along, you think everything is at a good place. And then you get the forwarded email with the caption, please handle, and how the younger generation is reacting to that. I mean, when I was a young associate, it was just, okay, got to do it,
Right.
and just get it done. And there is backlash at that. And I bring that up not because I'm saying that you shouldn't do that, but understand the psychology behind that, you know, if someone is not accustomed to, one of your employees is not accustomed to having their hair on fire essentially on a Friday afternoon because you have a deal going on, then, you know, to throw this at them may create problems. But also someone whose hair is always on fire and is expecting that at 6 p.m. on Friday afternoon, you know, just because they're expecting it, is that appropriate? Like, if it really isn't an emergency and you can be more diplomatic in how you express your desire for that employee to handle that issue a little bit urgently, maybe it's not an emergency situation. So just be mindful of that. And then lastly, as we kind of go into the topic today of finishing strong, I just Googled finish strong and saw what I, you know, just kind of pulled up what I could find. And I found finishing strong quotes to help you go the distance. And so I'm going to share some of those with you. And the first one is, many will start fast, few will finish strong. I think we've heard that before. You know, it's like, okay. And it reminds me, I'm a runner. So I think about the Cooper River Bridge run where you start in Mount Pleasant. Yes. And you run for about 2 miles on a level surface with no slope. Then you get to the bridge. And, you know, at that point, everybody's feeling good. They've run, you know, 1.5 miles, and they then get to the bridge and they know it's coming and they're like, oh, this is great. And then you start running up the bridge and you're just like, okay. So, you know, and for those first 2 miles, they're like, oh yeah, this is great. And they're, you know, sprinting and they're zooming by everybody. And you're like, oh, wow. Okay. And those are many of those are ones that you see walking up the bridge after a few paces. So next quote is, starting strong is good. Finishing strong is epic. The word epic has become more in my vocabulary because of my kids when they were younger, using the word epic. So I can appreciate that. If the word quit is part of your vocabulary, then the word finish is likely not, which I think is a good one. You've got to be able to finish out the season on a strong note. Yeah, okay. And this is similar running. No one has a problem with the first mile of a journey. Even an infant could do fine for a while, but it isn't the start that matters. It's the finish line. So you kind of get the theme, which is, okay, you know, you may be running and doing great, and but you know, you want to finish strong and do what you need to do to make that happen. And not just assume that's going to happen organically because things went well for the first 3 quarters. So there is a segue into the topic of discussion for today.
I love it. So before the broadcast is out, since Jack was talking about hair on fire, I've got a special thing that I'll share with y'all. It'll be a screen share that you guys will be sure to enjoy. I guarantee it. So stick around for the end of this because I will show you something that has to do with hair being on fire. So
finishing strong. That's what we're all about.
That's exactly right.
How to finish strong in the sports arena in Charlotte. So there you go. So
one of the things that I would love to have each of you guys talk about, we all 3 of us work with a lot of business owners. And I'm going to talk about something that is not finishing strong, and we'll compare and contrast that. I want you guys to be thinking about some of the best practices that you've seen with companies kind of keeping their foot on the pedal and getting ready for the next year. But what are they doing with their teams? What are the kind of protocols they're doing? What kind of metrics are they measuring repeatedly, et cetera? Because it's amazing to me how few companies are actually doing things really right, I think. Or let's just put it this way. I would say pretty much every company, including ours, has room for improvement, process improvement, et cetera. But one of the things that does not work is procrastination. And we're seeing that with a 10-15 deadline on extensions. I think this year we have seen more people than ever wait till the last minute, their hair's on fire, and it creates chaos for everybody. And so, you know, what can you do? That's one of the reasons we love having quarterly meetings with our business clients, because we don't want a flaming shoebox on fire at the end of, you know, the year, like, oh, here we are, you know, or at the last minute on deadline. It doesn't work. You're not going to get your best work from your teams and supporting people, et cetera. So that's one of the best practices, or worst practices, I should say, is just like, hey, let's wait till the last minute. Oh, hey, I mean, literally, I heard this week. Well, the deadline isn't, the taxes aren't due until the 17th, right? They hadn't got their stuff yet. And this was another CPA that I was talking to. So it wasn't one of our clients. So I'm not rolling somebody under the bus. But I'm like, yeah, that would be a non-best practice. So, Adam, think about some of the clients that you admire the most and what they're doing to kind of keep things moving, regardless of what's ahead. Give me an example of something that you think that has been a good best practice.
Yeah, I think, you know, thanks, Gary. I think, you know, the levers can really change, you know, quite a bit, but that you're pulling. But I think right now, what I would be trying to get ahead of is our best practice clients are ones who are financially disciplined in terms of like using their data to forecast, budget, and then also to make decisions that are factual, you know, based on fact, not hunches or intuition, by using good information that can give you historical context to then make a future decision, which is just a rambling way to say, hey, take your financials seriously. It's not a shameless plug because I'm an accountant. It's just like, look, it's the only scorecard you got, you know, is your financial data. So I think the best practice right now is you're going, you know, first off, if you haven't ever budgeted before, you know, it'd be a good year to start, you know, make that your New Year's resolution, you know. But if you are budgeting, you know, I think getting ahead of, just as much as I want to stomp my feet and pretend that it's not really going to happen, you know, I think you probably need to be budgeting, you know, anywhere between, you know, call it a 10% or 15% labor increase, you know, just on a conservative side, meaning like, hey, just in case, you know, it's out there, just, you know, so that you kind of know what that looks like relative to flat or marginally improving sales. Because at the end of the day, that can be pretty eye-opening, because in most of our clients, the labor rate represents anywhere between 25% to 50% of the total cost structure, depending on whether you're manufacturing or you're a services-based company that doesn't have a cost of goods sold. So I think getting ahead of that and modeling it, you know, and just, you know, kind of having a better handle on what your future could potentially have in store for you next year is just going to make you a lot more rational when it comes to having to make decisions as you go forward, versus, you know, you're hit with the onesie twosie barrages of, hey, you know, I would love to stay, but, you know, I got an offer for blah, blah, blah. You know, hey, boss, what are we going to be doing about inflation? You know, hey, boss, you know, so I just, you know, or you get, you know, you wonder why your productivity is down, and you realize you're the victim of quiet quitting, you know, all because, you know, your employees are not necessarily happy with you. They're just too lazy to find another job, you know, at this point. So I would get out ahead of the modeling, you know, planning on a bigger raise increase. It doesn't mean you have to do it, but but at least model out what it might look like, so that you're prepared and can really dive into other components of your income statement just to figure out, how could you potentially fund it, through other reductions, or possibly, finally getting serious about a price increase, or cutting some marginal customers, that should be cut, so that you don't have to, you can have you can have the same employee count, or maybe even a slightly smaller employee count, focus on customers that contribute the majority of your profitability.
Yeah, that's a great one, actually, because it was about this time 4 years ago. No, actually, it was about 3 years ago now that I think about it. I had a client that I said, man, when's the last time you guys were evaluating, or when's the last time that you've actually understood really the profitability by customer? And they're a services business, and they really hadn't done that for a long time. They thought they made assumptions, but they didn't have any assumptions based on data. And so their CFO started going through tiering their top customers and on down, and their first customer they were losing money on. And it was 25% of their business. They were losing $35 an invoice on, like, well, wait a minute, so understanding your profitability. Well, so then you got a choice. What are you going to do? You have the hard conversation and say, if you like the client, we got to have price increases because we can't afford to pay you to do your work. And those are not fun conversations, but when when you're armed with data, you've got courage, because it's just the facts don't lie, and what was really cool is they used that exercise. They kind of culled the herd. They found some that were very unprofitable, that weren't willing to deal with price increases, and most of those were kind of problem children's. They didn't say please and thank you, and they were just kind of running roughshod over their crews. They eliminated those. Well, guess what? That improves your bottom line, and it may not improve your top line, but top line is just one indicator. And so it was just really interesting to see. And they did this in just about a 6-week period of time, and it made a massive move for them. So I would encourage you, if you've got a fractional CFO, or you got a full-time controller or CFO that can do some of that analysis for you, do it. And if you don't, hire somebody like Robert Mayetta, because he is like a dog on the bone. He will find it. I would be curious too, if anybody, if you would hit us up on the chat, if you've got some best practices. Like Robert, I'd love to hear from you if you're on here, and I think you are, on some of the best practices that you've seen some of your clients do, especially going into the fourth quarter to finish strong. And while we do that, Andrew Tucker just hit profitability by customer and product are critical numbers to know. Companies should not sacrifice margin for revenue. Man, that is so true. And yet we see it. It's unbelievable to me. Like, these are 8-figure companies that I'm talking about. It's not like a, company that's doing a couple $100,000 a year. It's like, no, these are 8-figure companies. So anyway, thanks for weighing in on that. Jack, anything you want to add?
Sure. So when I think about finishing strong, I kind of think about, and for me as an owner in my law firm, partner in my law firm, what does that mean? And so I think for me, it is looking at what is currently in front of me as far as financial statistics. So it's looking at what are my ARs. And as a member of our finance committee, I'm kind of looking over, and also that the head of our business law group, looking at those statistics. So the data that is in front of you to say, okay, we're owed this money. Why haven't we received it? So let's make contact with that client to find out why we have not been paid that. Is there a payment issue? In some cases, it is it just wasn't getting to the right person to get a check stroked essentially. And so we look at those kind of things and look at, okay, as we approach the end of the year, how do we bring in that revenue that we've earned essentially, that work that we've done? And then, as Adam said, kind of looking prospectively as to what we got going on in the following year, or what we think we have going on, and what are the budgets. A lot of businesses that I see are, okay, well, let's just add 10% to what the budget was last year. And it has no correlation to actual results. Others will say, okay, well, and I think a better approach is to look at your financials and identify what are the anomalies to that data. Was it that, for us, that we had an unexpected expenditure for some reason? Our, like everyone else's, labor costs are up for us, as our other law firms, other professional services firms. And so, what does all that mean? What does it mean looking forward? Did you have anomalous investments in technology to get you through COVID? So what does that look like? And are those anomalous data points, is it appropriate to extract those from the report to create a budget moving forward, versus just saying, well, same as before, but let's add 10, 20%. So I really think that you need to look at the perspective, but need to focus on what is also going on currently within your business to figure out why, with only a few weeks left in the year, you're not getting paid. What has changed from your budgeting for 2022 to actual, and what is anticipated for the coming year. We get pretty elaborate reports from our CFO as to, this is how we are doing, this is how we did last year, this is in comparison, this is what our expectations are in revenue and costs. And so putting all that information together helps inform us, the owners of the firm, as to where we might end up at the end of the year. And with increasing accuracy, obviously, as we get closer to the end of the year, because then it becomes actual versus budget. So, but I think that a lot of people, and understandably, will see that, it is just, they get so wrapped up in end of year and just getting stuff done, and wanting to get to wanting to get to Christmas and New Year's, but basically looking into next year without focusing into this year, thinking that this year is just, it's going to happen the way it's going to happen. But I'm a believer that you can influence very specifically how you end up, if you're going to finish strong or not, by paying attention to the variables and pushing on some levers that you need to push on, rather than saying that, well, if the check comes in, the check comes in. It probably will come in because they are good payers and they usually pay their bills and want to, for their own financial data, they want to make sure they pay the amount that's owed in that year to keep their books clean and straight, kind of thing. So it's those kind of things that I think we need to look at, that sometimes do not get looked at sufficiently from my perspective.
Yeah, that's good. Adam, I'm just curious too, from your perspective, you've been doing this for a long time. What do you recommend? So we try to make sure that we're meeting on a quarterly basis with our business clients. What are the things that you think should either be done more by more companies, or that need to be stopped doing by companies, just to make the transition from the last quarter into the next year be better, missed opportunities, etc.?
I I think it all comes down to using the information that's available to actually make an improvement. I mean, honestly, the companies that I've seen do the best turnarounds, we've had a few of them that are, kind of attendees on this call, but the story is always the same. It's that, one, they make a commitment to have good information, meaning like I'm gonna at least have the information available to make a decision, even if I choose not to make a decision about it. And then the second is they actually do something. They take action. They don't just say, oh yeah, that's not good, and then not do anything about it. So, using another example, that we've had, I mean, had a client who did the job profitability thing, and they had the same deal that Gary, you just described, which is they had never really looked at, even though their CFO knew that their customer profitability, they had some problems. They were revenue chasers, not customer profit chasers. And when we finally said, you got to work on gross profit, and we went to the CFO and said, hey, can you break this down by customer so we could focus on the 10 biggest money losing customers, that aren't hitting the gross profit standard? Sure, I already have that data. I've been producing it every month, but nobody's looking at it. Okay, well, we're going to make that the number one focus in the meeting. Lo and behold, after, a couple months of seeing the same repeat offenders, they started taking action. We're going to have a conversation about a price increase. Okay, the contract's up. Let's make sure we fix the problems. And it's they were, it was a $13 million company at the time that we were doing this, that, their gross profit problems, were in the, hundreds of thousands of dollars per customer. Now, when they run, meaning these customers were not hitting the gross profit target. Now, when they run that same report, you're talking $5,000, and they're a $35 million company. Meaning they could probably get away with actually not looking at it anymore because the problems are so negligible, and they've beaten that gross profit, contract value, price per widget thing in their team's head so much that they've shut the compartment. They've solved the problem. They've moved on from it, and there's other places to go look. So I think, kind of picking out the one or two things that are going to give you the biggest bang for the buck, in terms of the quadrant of, highest impact, easiest to solve, and then actually solving them, is really, yeah, exactly that. It's that's what I've seen makes the big difference.
Yeah, I held this up because Adam gave me this book, and I devoured it over at the beach one time this summer. And man, it's a good book, 80-20 Principle. If you haven't read it, Richard Koch, get it. I'm glad you mentioned that dashboard. So another example, friend of mine, their company got acquired by this massive PE firm. They went from very simple and actionable dashboards in this company that got acquired to voluminous reports, just drowning people in paperwork, and nobody's doing anything with it, but it's just a sea of paper and reports that go somewhere. Keep it simple, stupid, man. It's just keep it simple, stupid. Robert Mayetta, thank you for jumping in here. I appreciate you doing this. So here's what he has responded. He said, thanks for the endorsement, of course. You're very good. Many things to add value include ensuring that balance sheet accounts are reconciled monthly. It's amazing how many are not, or they think that they are and they're really not. 2, evaluate accounts receivable and accounts payable and detail the planned cash flow. 3, identify miscellaneous costs that can be eliminated and consult with BGW on how best to mitigate tax obligations. That was not a paid endorsement. I'm just saying, if you're doing all these things all year long, you can finish strong without stress. Good point. I appreciate that. One thing, here's a thing to think about. Take notes on this one. This is super simple, but we do this with our coaching clients, and then our outside coach does it with us too. And we have our quarterly planning session next week with Robert Fish. But ask your team these 3 things. what should we stop doing? Stupid things, or, things that are making things hard, that are not yielding any results. What should we keep doing? Like, let's preserve the stuff that's working. So that's good. And what should we start doing? Like, these are ideas. What could we be doing that we're not doing? I think those are three really simple questions. Ask your team. It's an amazing and simple process, but it will, surface some pretty good results, I think, if you just do it and do it repeatedly and with purpose. So anyway, on that, any questions from the gallery? Thanks for weighing in, Andrew and Donnie, as well as Robert. Thank you very much. Appreciate that.
So while people are putting together or thinking about their questions, so yes, what I think we're saying is that you have to put together your TPS reports and make sure that those get circulated amongst your peers at the office. And whoever is first on the gun to tell me who or which movie that is from, then I will give away a Starbucks gift certificate. But yeah, I mean, it is. I was like, okay. I was like, TPS report, is it TPM, TPS? So I cheated. I did look it up to make sure I was saying the right
I was
thing.
going, TPS, what in the world are you talking about?
Yeah. So, whoever, and no cheating, no Googling of TPS report. But yeah, it's, again, if you have the data in front of you, and I think that, okay, so it looks like, Mr. Lambeth, will we? Yes, that was on the other day, like on
Bill Fisher.
Kate, there you go. And so again, just looking at the stuff that's in front of you, and I think that we get so wrapped up, and it's just like, oh my gosh, it's October 15th, and yes, we need to make sure we know where our staplers are as well. So yeah, I got mine right here, so it's all good. So but just again, being self-aware, and then because we have business owners and clients that are, they go into the first quarter of the next year, and they're like, oh gosh, if we had only done this, if we had only done that. And they had the ability to do it. It's just that they just got wrapped up in, what was going on, which again is natural. It's human nature to deal with what is in front of you and deal with those issues and say, I will get to the rest of that, all that other stuff another day. And then before you know it, it's Christmas and you're spending time with family, and I mean, it's too late at that point. So this is prime time to do some introspective looking into your business and the telemetry that you have in your business.
It's funny, you did have a whole bunch of people that came in on the chat as well as in Q&A. You're gonna have to figure out who gets the Starbucks card on that. Oh man. All right. Well, I'm gonna share my screen. We're talking about hair on fire. So can y'all see this?
Yeah, just some hair, but not the face.
Can you see it?
Just the hair, not the face. There we go.
Oh,
Yep,
really?
Perfect. Yep, there we go. Nice. That looks like fun.
That was Jack and me at the last home game of the Charlotte FC, tying the Columbus Crew 2-2. And all you got to do is bring wig and fun happens.
Oh boy. Not good.
Although
Not good.
admittedly, I don't look as good as you do in a wig. And I was constantly I was looking at you and like adjusting, and I was like, okay, You know, I was very self-conscious, but after a while I was like, okay, whatever. I'm just gonna rock it out.
That's right. Comparison kills gratitude. You just got to wear the wig your way, man. All right. Any other thoughts from the gallery on like best practices that you guys have seen or questions that you have? Think about from a tax standpoint, end of year, and let's say that your experience and your organizational prowess was not ideal this year. What can you be doing to make sure that next year is not a repeat of this year? So think about that. One of the biggest things that you can do, if your books are not clean, I can guarantee you it makes it really, really difficult, and it costs a lot more money for your tax preparers to have stuff in order. And what's kind of a funny universal truth, what I've seen is pretty much everybody thinks that their books are clean, and rarely are they. Yeah, certain things may seem like they're balancing, but there are a lot of times that things get put in the wrong categories, et cetera, that does kind of create an issue. So if there's anybody that has a best practice out there that wants to talk about, hey, this is what we found that actually works to help us get ready so that we're not doing a fire drill at the end of the year, weigh in. I'd love to hear about it. You did get a lot of response on the office space thing. So
Yeah, I was going through and taking notes as to, who got it. And yeah, by nanoseconds. So I'll be sending out more than one coffee card to the winners. So
you're good like that, Jack. All right, cool. So next question for those that weren't on the front end of this thing, because we've had a lot of folks kind of come on later on. Next week, we are going to be talking about this month's theme of Cybersecurity Awareness Month, which is evidently a deal. But cybersecurity is increasingly a bigger and bigger deal. I had a friend of mine, actually, I was involved in the sales turnaround of this company, but they do insulating glass manufacturing. So they do the glass sandwiches in multi-pane windows. And they got hit with a ransomware deal twice. The first one was like $20,000 or $30,000 like ransom. Not that it's insignificant, but they paid it. The next one was millions. And not only did it shut them down, it shut down other manufacturing plants that rely on those glass sandwiches to come and do just in time. So the ripple effect was massive, and believe it, their cyber insurance did not cover even close to that. And it's just terrifying that you can be taken down in an instant. And so, not to put undue fear in people, but it's like, man, it's a real deal. I mean, my Instagram thing got hacked 3 or 4 months ago. It was on actually July 19th, the last time we were in our quarterly meeting with our coach. So we're coming up on the next one next week. While we were in that meeting, somebody hacked into my account. I don't know why anybody would want Gary Fry at Instagram, but somebody did. And I had thousands of followers, all gone, boom. And I can't get them to move on it. And I wasn't posting crazy stuff or controversial things, just crazy. Like, you feel very violated, but what can you do? So again, we've got former cyber crimes FBI guy, Evan Taylor, and then we've got Opkala's CEO, Aaron Bach, that will be joining us as well next week. So that should be pretty interesting. So be prepared for thoughts and questions for next week when we tee that thing up. Any parting? Go ahead.
I was gonna say, and Gary, what I would expect, I think that they'll talk about next week is, what you described is kind of in the moment, instantaneous. There is also, I think, an equal amount of slow gestation of the infiltration of organizations. What I mean is that, imagine the organization being a column, and the CEO is at the top and the C-suite is up at the top. And then what they do is they infiltrate at the lower levels, and then they work their way through until they get to a point where to the next vulnerability, which is that they find someone in middle management that does something. We have had, and I think other professional service providers have had the, hey, I am, it's the attorney that tells the legal assistant to wire some funds because there's an emergency situation, and so I'm authorizing you to get that the check or the wire transfer funds, and please do it as soon as possible. And a lot of times it is at a time where there's a lot of vulnerability, where it may be that it is a Friday afternoon, and so and the message is, I am unavailable for you to call me back to discuss this. So just proceed with my email authorization to do that. And so it's those kind of things that, I think that there previously has been this presumption that, well, let's just protect the upper echelons of our organization, and let's have cybersecurity awareness training for the upper levels of management or just of the organization. And I really think it begins and should begin at the very base levels of the organization to make people aware. And our IT folks are, I don't want to say constantly, but they periodically will throw something out there just to test people to see who falls for it. And then it's like, hey, this was a phishing scam or whatever it may be, and please click on this video, this link to this video, to learn how to better yourself and not falling for these kind of scams, because it's basically you're endangering the health of the company essentially. So they really have it mastered as to how to make you feel guilty once you do that, and hopefully put you in compliance with reviewing those videos and becoming a better steward of not letting people into your organization.
Yeah, the shame factor works, and at least they're not tarring and feathering us, like hear ye, see this scoundrel. All right. Any parting questions? Any final questions from anybody out there before we bid adieu? I want to say thank you for everybody joining us, and we'll look forward to next week. It's always interesting with hearing an FBI cybercrimes guy. There's some interesting stories if nothing else, come for the stories next week. So, all right.
So,
well, we're going to say,
I will depart with this one quote as, there's a lot of good ones, but I think that, as we've talked about looking intently at what you have going on. So the quote is, go as far as you can see, and when you get there, you'll be able to see further. So two things. I mean, I think that is true, is that we get, like I said, so wrapped up in what we're doing, we can't see beyond a certain place. So just get there, put the wheels in motion, and then you'll be able to see further. So those are my, that is my departing advice to all of you.
awesome. Thanks so much. And thanks for being a good sport, wearing a wig at a sporting event with me. And if anybody wants to go through the BGW CPA YouTube channel archives, I do have one episode back in, I want to say maybe June or July of 2020, when Adam is also sporting a wig and we're doing a little Wayne's World thing down in his basement, you know, as when we were broadcasting live. All right. Have a good one. See y'all. Thanks, Adam.
Thank you.
Thanks,
Thanks, guys.
Thank you,
Jack.
guys.
See ya.